Welcome back, guys. Happy weekend. We made it. Made it through Friday. Today was a pretty interesting day again, sort of capping off the week. Uh, Taking a look at everything. NASDAQ was down a little over 0.5%, heading to 1. In terms of the day, completely really break-even day. S&P, obviously we opened a little bit lower. By a little bit, I mean 1.5% lower on the total. Uh, in terms of the day, it did not hold the support like we were looking at earlier. When we looked over here, we kind of finished off with this candle. I kind of gave a little bit of a benefit of the doubt on some positions that did this in the last few minutes. So some of those positions that we talked about entering over here, we had nice bid coming off support. We actually bounced on the support a couple times. That was enough for me to go ahead on some positions and say, you know what, I like the support, I like the area, and so I'm okay with pushing it over the weekend. Again, due to really the way in which the risk finished off the week, we saw that a lot of our positions got taken profit, or at least translated into much higher highs via the Nasdaq going all-time high. So things like these positions with the mega caps did significantly well this week, right? So mega caps all over did very well this week, and so even with today, Apple took 1% profit, Amazon broke even, Microsoft broke even, had bid, Google down. The percent today doesn't really add up to, again, what it had done the weeks prior. Same with Facebook, right? We've seen just sort of consolidation. Tesla put 1% on. This is a question going into the weekend. We talked about Ford going over the weekend, right? I took Ford over Tesla. We'll see if there's a difference there, right? We learn from it, right? See what we have. So in terms of the EV side, unclear. But overall, what we did see was, at least today, a continuation on some names that are very growth specific, and so Nasdaq doing a bit better, right? Didn't really lose much. So we had things like Docu putting another almost 5.5% on. Really, really happy with the way this chart's continued to get traded. I think it's important to see when you know, kind of a rough last 2 days you could look at it, depending on what you have for portfolios. But again, there are names out there that have done well, and it's important not to take maybe the average, the look of the average, and say, you know what, I'm a little worried about pushing this position. A lot of these are completely different, right? We had things like Roku today continue to put points on. We don't want to go and look at the S&P being down 1.5% and say, well, I better go take profit on this position because the market's down, right? We don't look at things that way. I think everyone understands that. But overall, there wasn't anything that really stood out too much. We did have the home building position have a nice start today, almost 4%. So for a weekend trade, it's a very nice baseline. I'm not worried about anything going into Monday on this sort of trade. And so at least this angle was good. We ended up putting the idea of Z out there. Now, this completely turns into your own sort of risk. I ended up holding this and going with it over the weekend, sort of what I said with the S&P. This was tied with to this sort of pullback that ended up being a little bit more. I ended up saying, all right, let's go with it. Let me show you the last 5 minutes for my decision here. The last 5 minutes, the S&P was pulling back, and it's opposite. And so what I thought was, whatever forces were pushing this just take profit before the weekend, right, is exactly why it will be up on Monday. And so I do think S&P again is going to be up on Monday overall, and I think it's going to be a nice week, sort of digesting what we saw this week again. And we need some time to digest what happened. We're a little confused on rotations and everything else. And so when I looked at something like Z, I said, you know what, this is a little bit opposite to what we see in the market. This is a different move. And so in conjunction with the home builders move, I think it has this level here. I think we've put the bid on to realize the level, and I think there's a little bit of an error there. So for 1/2 to 0.2, I think you're going to be all right. And so that was interesting. We'll see if that works. Again, not clear if if that's going to be there. The other position was the Adobe side of things, which again has been a very long-term trend here that did very well. Overall, not much else. We saw things like PayPal continue 2%, really nice day. TWLO I talked about coming above the resistance, really nice day. But overall, pretty minor gains, and so nothing that like screams like, look at me. Again, continuation shop. So again, the big names that we've been looking at doing very well, and so that's a good thing, right? That is a good thing. But just in terms of something that was surprising, nothing surprising. pretty back and forth. We saw travel pretty even. Again, this was the trade we have going into the weekend. So, for instance, AAL here at the 22 was pretty nice going into the weekend. We got a little bit of a pop. It's not down 1.5%, right? It's not down 1.5% like the S&P, and so if it's green, then that's what you needed to see, right? And so there are positions that did well. Let's bring it over to the two big questions, right, of banks and energy here. Now, both are coming into support, so it's what the energy looks like. It's what banks look like here. This is a really interesting dynamic, and we try to figure out this today. If we look at intraday, where we were looking at it before, we finished completely break even. Now, as you can guess, yes, I held these positions for the weekend because I can't help myself. Whether that was a good choice in terms of risk or not is a question. I ended up losing. This is about 70 basis points right here from my entry that I lost. And the thing is that the options were not changing price and time because this happened at the end of the day. And so what I'm looking for is to at least erase this here on Monday. And the thing is that this chart with energy, again, we have a rotation into growth, and we're not going to sit here and act like there's not a rotation into growth. So we're hammering away at growth, right? Like we have been. But I'm not going to go ahead and give up on this side of things when you go ahead and compare what's going on. This is crude. Crude put a new high in today. If the price of a barrel is putting a new high in on the day that we're also taking profit on this side, then things are not adding up. So which one's right? Well, this catches up. This is speculating, and this is an outflow going into something else. We know exactly why this is selling. If you know exactly why something is selling, and then it's technically correlated, right? I'm not trying not to use the C word, but we know that it's 1-to-1 with crude in most oil prices, then this should be snapping back. So this is a position that I put July monthlies on. I talked about it. I'm not looking to go push a long position because again, we have a change, we have a rotation happening. I'm looking to get exposure to the move that's about to happen. I think this thing whips up. I think it whips up from support. The bank angle is a little different. Whoops, that's not it. I think the bank angle is a little different, and the reason again being is that energy is tied to the oil prices with the commodity, and oil is the only commodity that is still in its cycle and doing significantly well. Other commodities are down. We've seen things like steel down. Our X trade that we talk about, that we try to swing, that's again only a short-term swing. You do not hold that long-term. So anybody that's trying to hold X long-term, that's the exact opposite from how we trade that chart. Just want to say this quickly. X is a swing. We take it from a low and swing it to a high, and we get the hell out, and then we take it again. Today, you didn't have an opportunity to take that here. If you had the trade from yesterday, like we had talked about, then you got stopped out today. You don't get to choose when you're getting out. You get stopped out, right? We do not hold on to it. You cut your losses immediately. That's what the stop is for. We never look at anything in the red. If you're in profit, you're up like 30%, and then you lose 10%, you can hold that loss. That's not in the red. In the red is from where you enter, and then it's below. That's being the red. So again, this is a swing trade. This is tied to commodities, but it's not tied to a commodity like oil that keeps going up. So steel's going down. So we don't take a trade like that. With banks, this isn't tied to anything, right? This is completely tied up to basically what we think, right? And what our opinions are about timelines. It's a little overdone, though. It's a little overdone, and it's a lot of take profit going into growth, but it was a little overdone. And so I'm okay holding this position for Monday because at the end of the day, I say this a lot, and I do believe that when you sell everything at once. You don't wait to sell. And so anyone that didn't sell today going into the weekend, they're not going to sell Monday. That's how I look at things. I don't think a rational person does that. Again, markets don't need to be rational, but in terms of if you had a decision to make, you would have already made the decision. FOMC already happened. What do you need to wait and see? Do you need to? What do you exactly like? There's nothing there, and so I'm happy with buying there and holding it, even though it was a little bit rough, a little bit rocky. And the best thing to think about this is it's really easy to be like, oh, we like banks, and then look at this pullback, right? Kind of a violent pullback as a negative. This is a positive for us buying on a discount. We didn't hold through this. Nobody held through this entire thing to the downside, right? This is positive. We get to buy down here and swing it back up to a high, right? That's good for us. And so I think again, it's really easy to look at times when the market goes down and look at it as such a bad, as a bad thing. Like, oh no, the S&P came down quite a bit this week. Like, oh no, this is not good. We want to be bulls and long, and it came down 2.5% this week. This is a good thing for buying, right? We want that. We want this volatility there, right? That's how we make our money. And so this is opportunity. Again, you missed the moment to buy over here. Well, you're getting another chance. Did you buy? Well, we're going to find out, right? You're going to find out who is able to buy on pullbacks or not, right? How many times have we done this? Unless you want to somehow guess tops and, I don't know, decide some sort of, I don't know, idealistic sort of fortune, and you realize that, you know what, this is it. This is literally the end. It's like the guy that said on TradingView that there's going to be a lot of hurricanes this year. It's going to shut us down. We're not going to have an equity market after those hurricanes. I mean, you're going to go really far to start to really convince yourself that things are not good, especially when the biggest companies in our market are going up, right? Things are very good. And so we do like to see things like this. Again, it's difficult, but it's where we make our money. And so again, don't look at this as a negative week. I want us to look at the weekly candles and just take a moment to sort of appreciate where we are. We started this week trading all-time highs. We took profit a little over 2% on the S&P. On the NASDAQ, we put almost 1% on, and we were actually bid through quite a bit, right? We bid pretty high. Again, we took some profit. FOMC happened. But look at the trend, right? We're still trending up. Higher low, higher highs. That's what we want to see, right? And then also, if we go into something like banks and energy, which did take profit this week, if we take a look at this candle here, you're still right up here at the high, right? Yes, it did not continue on this path that we're looking at, but it's been doing that for a while, and I think we can handle a candle like this here, right? Especially when we saw things like crude there. Same with banks. This is an opportunity here, and this is what we wanted. We've been talking about for banks is when the hell does this actually give us some sort of pullback to buy on? It's very hard to buy banks when they keep going through highs. I think we've all agreed on that. It's kind of garbage. You have to hold it for a long time. This is going to offer exposure to a short-term trade, which we have not got on banks in 7 months. This is a support buy, close to it, that you could not do anywhere else. These little buys over here, this was 5%. That's not going to offer short-term exposure to some sort of rally. We had to put a 3-month trade on. This here, you can get 1-month trade, sit on it for 3 days, and make money on it, right? So that's a different opportunity. But again, it's important to just take it in for a moment and realize that this is not somehow a terrible situation or something, right? This is trading being done. There's an outflow so that this can inflow over here, right? Or when you look at these charts, you look at something like this candle here. Let me turn this damn thing off. And you see this move this week. This is a lot, right? Go over to Apple. This is a lot coming. You look at Google and what it's been doing, right? It's pretty hard to look at that chart and realize that you weren't in it, right? That's how I've looked at a lot of charts. But the ones that we can be a part of are the ones that we've been a part of this, right? And so again, take everything into perspective and look at it as is, right? As the trading and not with opinions or anything else, and use it with price, and you'll see that this is actually good opportunity because that's when we make our money, right? So going into the weekend, we have, at least from my standpoint, I put a lot of risk on, betting on continuations, also being passive in a lot of areas that I don't understand. I think that's a very hard thing to do, is to take a lot of different trades. We were very active this week. We had big positions that we were betting on that were short term. It's hard to then be patient on some things that we don't understand. So anything that was just, it just didn't make sense and was too risky, did not touch. That happens, right? And so again, sort of risk management being the forefront of everything we do. I didn't push anything over the weekend if I didn't actually have confidence in it, or if I didn't have a baseline. So again, there's some of those trades that we made about 1% or 2% going into the weekend, which will let you hold through. It's a lot easier to do that, right? Next week, I say we are going to digest everything from this week with FOMC, and we're going to figure out what is this rotation. We'll get an idea of exactly what it means to be rotating back into growth. I do believe that there is some sort of idea of an area above growth in which we understand that inflation's happening and that there's some sort of discount happening on growth still. And so it's not fully all back to somehow before the idea of inflation. We're still going through it. There's just this adjustment happening due to interest rates. We have an answer that they are coming back earlier. And so we're getting a response rate now to that. I don't think that completely changes everything. And so when we look at the bond market, I want to bring this up again. What we had was this very interesting dynamic happen where all of a sudden we have this significant growth buying, and you can't hedge it with value because what are you doing? You're taking profit on value to make cash to buy growth. And so you can't hedge growth with value. What do you hedge it with? You hedge it with what you always hedged it with. That was the 10-year. And so we actually had some buying in bonds, which we can basically directly see as hedging to the growth market, the equity market, but tech companies and the like. And then what we saw was the 2-year being sold. And we saw the 2-year line up with the dollar. And I want to show this chart again because I think this is very interesting and important. We go look at the dollar. Dollar's been rising, right? But the equity market's still been bullish on at least the tech side, right? If we go compare this to the 2-year here, whoops, that's not what we wanted. Put on the new price scale. Here's the 2-year. Here's what the 2-year yield looks like in relation. Again, this would be selling of the 2-year treasury, and here it is accumulating in the dollar. So you can actually see this actually happening. The 10-year doesn't look like this. 10-year doesn't look like this. 10 years going down, right? 10 years going down. And so we can actually see the money coming out of the 2-year, but also how the dollar right now is not being influenced by the equity market. And so there's not an outflow from the equity market. We have not lost any flows from the equity market. Again, a statistic that I think is absolutely mind-boggling that I don't think people really appreciate enough, is I posted into my channel, it's the data just from Bloomberg, is that in the last five quarters combined, we've had an inflow of $1 trillion. That $1 trillion in the last 5 quarters is more than the last 10 years combined. We have not done $1 trillion we've done $1 trillion in the last 10 years. 5 quarters. Took just over a year to put a fucking $1 trillion into the market. And it's not slowing down. It's picking up. It's picking up when money supply is also out of this world and when the economy is booming. I think that's something that needs to continue to be stated or understood, because when we come over here and we look at things like this market just nonstop rallying, right? And there's more you say, it really puts it into perspective what's going on, right? We are very, very heavy in terms of buying. And so we're going to continue to buy. Don't let this, again, fool you or get you down. If you lost money on it, then you need to be consistent, be disciplined, and continue to buying at lows, because the people that are active in doing so, and again, being when we talk about our strategy of minimizing downside, you do not hold anything and you cut the loss. If you're disciplined like that, that means you have money to go buy. And by doing so, you're buying the low every single time. And if you look, you don't even need to put some phony idea of like hindsight. We'll see how every time you bought the dip, it worked. This is how the market works. You buy the dip over and over, you're going to, and I don't mean it in a meme sense. I just mean it in the sense of, again, we take profit on a position, look to re-enter it, so we're going to buy it at a lower point. The market continues to trend, and the trend line is built upon lows. And so you have to be taking those trades, and if you don't, then again, you're missing out, you're missing out, you're missing out. Look at the perma bears that continue to short and short and short, and basically 1 out of every 100 times that they short, they make profit. You can't sustain that, right? So we're going to continue being bullish next week. That's it. Nothing changed from FOMC or anything else. We already knew. They told us things we already saw with CPIs, right? Spoon says, any correlation / ideas with banks / MM sitting on a lot of cash? There's a lot of cash out there, yes. The thing with banks is, again, they've basically told people to stop giving them money because they can't spend it fast enough. The buybacks are coming. There's over $400 billion scheduled in buybacks this year, coming up like towards the end of this year already. And so it's going to be buyback city. We saw, that was a good question. So everyone's got cash. Right now, we know the 5 mega caps have at least $200 billion in cash, just straight up liquid cash on hand. All 5 of them have over 200 billion. We had the Apple announcement that they're going to be spending over 400 billion in the next 5 years of that cash, so of cash reserves. We don't know about the others, but we know they all want to buy back stock. Banks, we've had a few different times when buybacks. If you guys remember, sort of coming into this year, we started to get a Fed that was loosening up some of the things going on with the banks and then tightening a few things. And what they were allowing, though, is for banks to get back onto buyback schedules. And so that's recent. And so a lot of the rally that happened in here was fueled by the first round of buybacks with banks. Banks will be buybacking this, which is also our argument for why we started buying mega caps in the first place back in March, that March 25th date when we got going, but also in the most recent breakout. We used examples like Google with those big candles that were buyback candles. Anyone that has a lot of cash will be buying back. And that will, if you want to use some sort of correlation, the correlation would be to the upside if they buy back because that drives price up, right? And so that is supposed to be happening. You don't know the exact timing of when it happens, but we for sure as hell will see it. And so if you're a bank right now, you're made up of a bunch of traders and everyone's going, hey man, listen, our stock's down about 10%. Don't you think we should buy it? These things will happen. They will happen. In terms of the timing, I think you have this a little bit of a strange timing because the dividends. That's something to keep in mind is that buybacks in relation to dividend dates. There could be something there in terms of the timing. I don't think anyone really cares about waiting, and so I would imagine, like, if I'm on Bank of America right now, you're probably getting a buyback going right here. So I don't know if just because the dividend was back here, if you had a dividend coming up, that might present a problem. You don't really want to go buy back before a dividend date. If you can buy it after a dividend date, then perfect. That's sort of what I was getting at. Also, Chris had asked me about SPY D. I am still in this. I got my dividend today. This was the dividend date right here. Again, I entered right over here from this low. So I had gained, and right up here, basically midway through May, really through this area, we started to buy into growth. So I started to, again, this is basically my bank account. For those of you that don't know, this is basically my bank account. And so we started taking money out of this to throw it at growth. I still have a significant size here. So got paid on dividend on what I had here. In terms of going forward, this should bounce with the SPY. If it doesn't, then I'll need to look at it in a different sort of way because, again, this is not like having an option position that goes red and then I'm like, I have to get out of this. This is, as long as it goes up by next week, then I can still be in profit, right? So this is like, do I think the S&P 500 will continue to go up? Yes, I do. So again, this is reacting to its dividend date. Anybody that was in SPY D, please just look at the chart and understand how your dividends work on this chart and understand the timing. It's going to take about a week probably, but with the fact that you took off a lot, you're going to bounce with the underlying S&P 500. That should give you enough to get back up into 41 or something like that. So no, I will not be getting out of this unless there was some sort of play out there that I could. The thing is that I need cash working for me, and I don't want to put it in a bank account, and so just sitting there doing nothing. And so this is still gaining. I just got, here you go. I just got 4.68% on what I had in here, and I had the whole underlying gain that I took profit on things up here that I put into growth, and so I gained. Think about it. I didn't gain the dividend, but you're talking about a 7% gain on about 40% of what I already took profit on to go into growth. And so again, I have about like 60% of what I had from Bitcoin here. So yeah, it still makes sense to do it for anybody that was in a position like that. I think some of you with larger accounts probably followed me on this. I think if you do the math, it makes a lot of sense for where we are to still continue again. Uh, the question of how much we go into growth will be maybe answered next week. I don't know if we'll answer it next week in terms of portfolio composition, but we have gotten very aggressive. I don't know how far that leads. I think it'll depend a little bit on how people are feeling next week, and it it could be a lot of different things. So I don't think we need to really get going too far into that discussion until we've actually seen price in front of us tell us what we should do. I'm not going to use my own opinions on it because I think it's a little right now it's a little bit too new in terms of this rotation to really understand. So we'll take a look at that. Otherwise, I think this was a really again, it depends where you were, and it's okay if you had a bad week. It's again, there was a big sort of week, a lot going on, more than I thought it would be. I thought it was going to be a little bland with FOMC. If you look at it through the tech side, it was bland, but S&P energy banks were very hectic and very interesting. There's a lot to learn from. So even if you did lose, and maybe, hey, listen, if you didn't get aggressive like some of us that really started to put the gas on and took some really interesting trades. Again, I would say the AMD trade was a lot of fun. Mine, like the money part is always great. Again, we made 1,000%, made 1,000% on this trade for doing nothing. But I think there are interesting things like that that take a change of view, and you have to really do something different to make a trade like that. That's why I talk about it. And then things like Amazon, taking these trades are just, there's something about them getting the timing right. You're never going to be timing things perfectly, but the more chances you take, the more likely you are going to get the timing right. And when you do, damn, it feels good, right? It feels good to get these moves that pay just differently. They pay differently. Uh, we're going to be getting into it more. We're going to be getting into a lot of chances, casting a wide net, looking for things that others are not looking for. And so it does take a different mentality. If you don't have the time for that, then again, you need to be really sticking to a disciplined strategy of making sure you're taking those like 3-month options and being very downside risk oriented, making sure you're cutting losses immediately, getting stopped out, not making mistakes that we make when we're getting a little lazy, or we make excuses, right? Like, oh, I'm too busy, I can't do this. Then don't enter it in the first place, right? If you can't do it. Right now, it's just about being in the market, right? We know we need to be in the market, and we know we need to change our mind every now and then, and keep problem solving. But for those of you that want to keep being very aggressive and at least active and problem solving every day, then this is a great time because you have people that don't know. I don't know right now. But what we do is we're going to try to find the answers before everyone else. And when we do, it pays off, doesn't it? And so right now, look at what just happened when we look at the S&P chart and banks and energy. People right now are confused and there's a little uncertainty. What we're going to look to do is solve some of those problems and come back next week and continue to look for areas in which we can now buy new things. It's not sell new things, it's buy new things. We don't talk about that unless that's where the market is. If the market turns into some sort of bear market, then we'll be shorting everything. Got no problem with hitting the short button. Right now, we have to keep buying pullbacks and just choosing which ones to buy, right? And so, again, even if you lost money this week, it gives you opportunity to make money next week and put positions on that'll make you money a month from now. And again, do not go into the thing where it's today is what mattered, or the next 10 minutes. You need to be putting your mind way further than that. You need to be thinking about the next few months, the next year, what you can set yourself up with, right? It takes time. You're not gonna it doesn't work like that where this is all of a sudden this is what matters. You're going to have an average, right? You lost 15% this month, you're going to make 30% next month, and you're going to lose 40. These things are going to happen. It's about coming out on top when you need to be, right? When you need to pay for something, you get the money to do it. You want to at least be green through that, right? Don't get down on, again, the market's in all-time highs. Do not all of a sudden go and take it to something else. It can happen. This is the best time to be trading. That's it. It's the best time to be trading. It's the best time to be using the strategy that, we've put forward, using this idea of taking breakouts when others are taking trades and trying to preempt things when things are pulling back. There's just nothing better. It's just, that's what we have. It's doing the best right now. We want to keep with it. And so I thought this week was a lot of fun. I think some people may not have had a fun time, and it's not even about money, right? There's plenty of things I lost money on, but it's just so interesting, the things that happened and what that means for the future. So I think that's the most important thing. Is again, it might have been tough for some of you, but what's coming up here is very interesting again. Just like when we had the value rotation. Think about how well we capitalized on that move coming out of the presidential election. We made some moves that were pretty drastic, and that's where we are again. And so I think it's really exciting to get a part of the move. And so we're gonna look for those next week. Probably gonna have a lot of charts this weekend, guys. So watch out for those. But enjoy your weekend. I'm gonna get out of here. Let's have some fun this weekend. Enjoy yourselves, and I'll see you guys Monday.